Hey everybody, welcome back to the weekly Commodities Conspectus by me, Alex Bernal. Haven't been blogging for a few months, so I just wanted to get back into it. Here we go. First market that I've really been watching on a seasonal cycle basis, also on a pattern basis, is cocoa market. You can see here on the left seasonal chart, the December contract typically sees a major high turning point in the last week of August, the first week of September, and sells off pretty drastically into late October. The March contract also, you could see, has the same effect, the same cyclical effect in late September sell-off, looking at the potential double bottom seasonality cycle in October, November. This is really important to look at because the price pattern is very, very interesting in that we have a large-scale Gartley pattern. It's a little bit on the high end of the ratios, but I really think that given the seasonal tendency and the potential downward movement of this Gartley cycle, I think this is a really interesting market to keep an eye on. You can also see at the very bottom we have a momentum divergence, which usually is confirmative to these harmonic patterns. Next market I want to focus on seasonality wise is crude. With all the action and drama unfolding out in the Middle East, we've seen some pretty volatile spikes, but trying to look at this market objectively, one thing that cannot be ignored is the January contract typically sees a major sell-off in the second week of October, and it typically bottoms in December. You could see that during the contract switch, the March contract also reveals this same sell-off tendency going into the second week of December. So keep an eye on crude, even though we do have some heightened geopolitical problems that seem to be supporting the price. The price action is also very interesting concerning the commitment of traders, because you can see at the very bottom panel, this is the COT index. This measures the rate of change or the overbought, oversold positioning of the commercials. So you can see we've been in an overbought environment for quite some time, basically since July. And we're also looking at a potential deep crab reversal point. The only thing that might be contrary to this opinion is the current price action's been looking more like a flag. And so you can see that we've been kind of making this pennant here, this sideways flagging action. So given a wave count, Elliott wave count, this could be a potential wave 4. We could be looking at one more wave up, but I'm really watching this October time frame on the dailies for potential major sell-off back down to the 96-94 region. You could also see that the entire energy complex, unleaded gas, has the same type of sell-off going into December. Heating oil also has it as well. I just didn't put the chart into this blog post. Next chart that I think is really interesting, it's been a major focus of mine this summer because I think it's really going to reveal the trends that go and control into next year, is the US dollar. Again, as oil typically sells off in the second week of October, we also see in the March contract US dollar a major rally. Also two major rally points on this contract, another low being in December, right after when crude potentially makes a low. So crude and the US dollar are going to be very interesting going into the end of the year. I'm looking for a rally in the US dollar, even though it flies in the face of all the new money printing and non-tapering talk that everybody's been talking about. You can see also here our commitment of traders viewpoint for the COT index is right in the middle. So this is more a low conviction viewpoint to me, even though we're kind of at the bottom end of the range and we are sitting at support. So I would like to see some bullish price action on the dailies, hold above this level, this 80 spot, and then it should be confirmative of that potential seasonal move from low mid-October back towards the 83 region. Next one I want to talk about, pretty simple chart looking here, kind of supports the theme of the US dollar rally, is we have a 5-wave complete sequence up in the British pound. You can see that we also have a nice momentum divergence from wave 3 to wave 5, so that's pretty interesting. I'm going to be watching this uptrend line to make sure that if this breaks back down, then I'm looking at possible long positions in the US dollar. The next one that I've really been waiting all summer for to try to get back on the train is Australian dollar. You can see pretty clear 5-wave sequence down and ABC sequence up. So I think we are at the end of this retracement or very close to it. You can see we have a deep crab right around 95.5. And so I'm really looking at this as a potential long-term short position. Be looking for high volume or high conviction price movement to the downside to make a confirmation. Next one I really want to focus on, I've been watching this one with great interest, is the bond market, the long bond, 30 years. The one pattern that we've been really looking at for many months now is this potential bullish butterfly pattern right at 129.28 on the continuous contract. We bounced off the low end of the harmonic potential reversal zone. We are still making lower highs, lower lows, but we're really watching this because we not only have a severe momentum divergence from July to October, but also just the wave structure would suggest that this wave 3 could be coming to an end, and we could see a nice rally here in the long bond. If you go back and look at previous videos, I've showed you guys that the seasonal tendency for the bond market is to rally into the end of the year. Now we're a little late behind that seasonal tendency, but that doesn't mean that it can't kick in a little bit late this year going into January. So I'm really watching the long bond, and this would really coincide with the next chart, possibly confirm a move down in the stock market if we see a flight to quality or a fear-based rally in the long bond. I tweeted this out yesterday, and today the price action confirmed a short entry in the S&P 500 futures. You could see that I was actually waiting for this current 5th wave to be a B wave and then resume a C wave down. Now we've gone way past the potential B wave measurement, so I had to kind of zoom out and really look at the structure that's happening in the S&P. Now this particular pattern is called a wolf wave. It's kind of on the margin. Not a lot of people really study this pattern or can identify it. The other typical pattern that gets associated with this is the 3 drives. And so when you get 3 new highs with divergent momentum, typically this can be a long-term reversal pattern. So I don't really like to stick my neck out there and be the guy trying to pick the top of any major stock market, but right now this is a very convincing pattern. I think it's a very good risk reward, and the potential target is sort of a downward sloping target given this structure, so it could be pretty interesting. Given the magnitude of the sell-off, we could see a low point below 1600, maybe below 1580, possibly by the end of October, early November. So I'm really watching this pattern, and I hope you guys can see how, even though we have such bullish fundamental or psychological viewpoints up here at the highs, the actual structure, if looked at objectively, is showing suggestive of a potential top pattern going to the bottom side of the EPA trend line. Last thing I want to leave you with is just some of the interesting astrological energy points coming up for the next few months. We have a very, very tight cluster of energy between the 29th and the 1st. Jupiter 150 Uranus, Jupiter contra-parallel, and Jupiter parallel Uranus and Venus. So that could be pretty interesting because those are all outside planets and they're all on the same basically parallel latitude. So typically you see an effect in the S&P, the bonds, and the dollar with this. The next really interesting potential turning point here is the lunar eclipse. So eclipses are one of the highest conviction turning points for astrological movements. If we're moving down into this date or up into this date, I expect a reversal within one day of the 18th. You could also see Mercury retrograde is a couple days later. That's also very interesting potential turning point, since it's it's the closest planet to the not to the United States, but to Earth. So it shows a lot of effect on the S&P wheat and the gold market. The last one I want to leave you with, this is a very, very interesting volatility alignment. This is another one of those high conviction potential alignments, November 1st. Uranus square Pluto. This has been associated with a crash cycle, so really be watching the volatility and S&P near this time frame in the end of November. Thanks for watching. We'll see you next week. Keep your stop tight and let your winners run.